Welcome to the Deep Dive. Today, we've got a really fascinating set of sources. We're looking at Mohammed Majid and his firm, 3M Financial Services.
Yeah, it's quite a picture. We're not just talking about a business here, but this whole landscape, high-volume trading, global finance.
And this completely unexpected piece,
Yeah.
right? A major commitment to climate tech. It's quite the mix.
Exactly. So our job today is basically to pull all this together. We've got corporate registrations, global banking info, investment proposals, trading data.
And that carbon removal initiative,
Yeah.
all linked to 3M Financial Services.
Right. And the timeline is pretty striking, too. You know, getting a UK visa late 2024, then being named Financial Empowerment Innovator of the Year just mid-2025.
Yeah, that's quick growth. It really makes you wonder what's going on behind the scenes. Okay, let's unpack this. Where do we start? Maybe the basics, the foundation.
Good idea. Legitimacy is key for anything operating at this scale, and the sources show that. Mohammed Majid himself, he's registered as an individual taxpayer in Pakistan. That's registration number 6877775, Feb 2024.
Okay, so that grounds the individual legally in Pakistan. What about the company itself, 3M Financial Services?
Yep, that's registered too. It's a SMC private limited company filed with the SECP, that's the Securities and Exchange Commission of Pakistan. It's all linked under his taxpayer profile.
And what's its official business? What does the registration say?
It lists financial and insurance activities, specifically other financial service activities except insurance and pension funding activities, and also financial leasing. Pretty broad financial services remit.
Okay, standard enough for a finance firm. But you mentioned international links earlier.
Yes, this is where it gets interesting geographically. The Pakistani registration lists a business address in Malaysia. 61, first floor, Lorong Haran 51, Oakland Commerce Square, Seremban.
Malaysia. Why Malaysia?
Well, the sources show a history there. There's a prior company, Capital Marginal Multi-World SDN BHD, incorporated way back in February 2010. And Mohammed Majid is listed there too. As chairman of the board director, and importantly, the majority shareholder, he holds 450,000 out of 500,000 shares. So there's a long-standing connection.
Right, that adds some depth. But okay, moving from corporate structure to, let's say, the plumbing, the financial side. This is where the scale really starts to show, doesn't it? The banking relationships.
Absolutely. This is critical for the kind of operation they seem to be running. We have confirmation of accounts across 5 major global currencies and financial centers.
Which one?
We're talking USD accounts with Citibank in the US, 111 Wall Street, no less. Then AUD with Citibank in Australia, GBP with Barclays in the UK, AED through Standard Chartered in the UAE, and EUR via Banking Circle SA in Luxembourg.
Wow. Okay, so for the listener, what does that actually mean? Is it just a list of fancy banks?
No, not at all. It signals 2 really important things: trust and speed. Getting these kinds of accounts, especially across borders in places like New York, London, Dubai, it's tough.
You mean the compliance hurdles?
Yeah.
KYC and all that?
Exactly. Know your customer regulations, anti-money laundering checks. It's rigorous. Most smaller outfits just can't get through it. Having this network means they can move money fast, manage liquidity in real time, basically operate 24/7 across major markets. That's essential for high-frequency trading.
Right, which brings us to the trading itself. The sources give us some performance indicators, don't they? Like this Exness Premier Signature status. What is that?
Exness Premier Signature, yeah. It's basically an elite tier at the brokerage. Exness, it's not just for anyone. You have to hit some pretty serious targets.
Like what?
Well, the documents show they met the lifetime deposit target needed $100. They actually hit over $448,000 USD. And then there's trading volume.
Ah, the volume. How much are we talking?
The source shows they reached over $57 million, that's USD, in trading volume. And that was towards a quarterly target of $200 million.
$57 million towards a $200 million quarterly target. That's not someone dabbling, is it?
Definitely not. That's institutional level activity. It implies a really aggressive strategy to generate that kind of turnover.
And we have a glimpse of that strategy too, right? There's that screenshot.
Yeah, the Binance Futures screenshot. It's pretty eye-popping. It shows a single trade TRBUSDT perpetual contract.
Right.
Executed with 50x leverage.
50 times leverage. Hang on, let's just pause there. For anyone listening, what does 50x leverage actually mean in practice? That sounds Insane.
It is extremely high risk. It means for every $1 of their own capital they put into the trade, they're borrowing another $49 from the exchange.
So magnifying their position 50 times.
Exactly. Which means if the market moves just 2% against them, poof, their initial capital is completely wiped out.
But if it goes their way,
Then the returns are astronomical, which is what happened in this specific trade. The screenshot shows a profit of plus, wait for it, 1640.21%.
1,600% on one trade.
Correct, from one leveraged trade. It perfectly illustrates the kind of high-stakes, high-reward activity that seems to be powering this whole operation.
Okay, so we've established this picture. A properly registered entity, global banking, seriously high trading volumes, and extremely high-risk, high-reward strategies. So what are they actually offering to clients? What's the pitch?
Right, the core business model presented to investors. Their motto is financial freedom simplified. And the main document we have outlining this is the Proposal for Online Investment in Diversified Commodities, dated January 31st, 2025.
And what commodities are they talking about?
They list precious metals, gold, silver, energy markets, specifically oil, and foreign exchange currency trading, basically the volatile markets where they seem to be actively trading.
And what's the promised return for investors putting money in?
This is where it gets very attractive, but also needs careful attention. They highlight an average daily return of between 0.6% and 0.8% on the invested capital.
0.6 to 0.8% per day.
Per day. That's what the proposal states as the average.
Wow. Compounded over time. That's huge. That seems almost too good to be true, especially given the volatility we just discussed. How do they frame that?
Well, we have some profit-sharing documentation that gives concrete examples. One shows a client who invested 1.7 crore Pakistani rupees. That's 17 million rupees.
Okay.
And for the month of January 2025, they received nearly 3 million rupees in profit sharing. That's Rs 2,917,200 to be exact.
And how do they calculate that?
The document says it was based on an average daily profit ratio of 0.78% for that month across 22 working days. So it lines up with that advertised range.
But averages can hide a lot of variation, right?
Yeah.
Especially with 50x leverage trades in the background. Did they mention the risk?
Yes, and this is crucial. The documents include a disclaimer. It explicitly states the percentage return is not fixed.
Oh, okay.
It says it's almost the average of the month and typically ranges between 0.5% and 1% per day based on performance. So they acknowledge the fluctuation.
And what about getting your money out? Given the potential volatility, they must have some rules around withdrawals.
They do. The investment terms specify a minimum investment period of 3 months. And importantly, you need to give a 1-month notice period if you want to withdraw your funds.
Right, so that gives the firm time. It prevents a sudden run on withdrawals if the market has a bad week or month.
Precisely. That lockup and notice period is essential for managing liquidity when you're deploying capital in these kinds of high leverage, potentially illiquid short-term trades. It stabilizes things from their perspective.
Okay, that structure makes sense, tying the high returns to managing the inherent risk.
Yeah.
Now, let's pivot, because everything we've discussed so far paints a picture of, well, aggressive capitalism, speed, volatility.
Pure finance, essentially.
Yeah, but then there's this other piece in the sources that seems almost ideologically opposite, this commitment to the environment.
This is definitely the most surprising part of the whole picture. This same firm, 3M Financial Services, is the first Pakistani company to partner with Stripe Climate.
Stripe Climate, the payment processor's climate initiative.
That's the one. And they're not just ticking a box. They are contributing 2% of their revenue to carbon removal projects.
2% of revenue.
Yeah.
Not profit, revenue.
Revenue. That's a significant chunk, much more than typical corporate social responsibility gestures.
Why? I mean, why carbon removal specifically? That's quite niche, quite high tech compared to, say, planting trees or general conservation.
The sources actually explain the thinking. It's presented as a strategic investment in the future. The philosophy outline is that removing CO euros directly from the atmosphere is absolutely critical for the climate.
Okay, most scientists agree on that.
But the technologies to do it are still really early stage. They're expensive. They haven't scaled yet.
So 3M sees themselves as what? Early stage funders.
Exactly. The rationale presented is that by being an early, consistent buyer and funder, they help these crucial new carbon removal technologies move down the cost curve faster.
The cost curve, like we saw with solar panels or computer chips.
Precisely that analogy. Solar panels used to be incredibly expensive per watt. Early investment and adoption helped scale manufacturing, research improved efficiency, and the price plummeted. They're applying that same logic here using their financial muscle generated from trading
The fast, volatile money.
to provide the patient capital needed to make these slow, complex, permanent climate solutions cheaper and more accessible for everyone in the long run.
That's quite a connection to make. It reframes the whole operation, doesn't it? So
Right.
what specific technologies are they funding through Stripe Climate with this 2%?
The portfolio is diverse, but the sources highlight a couple of really cutting-edge examples. One is Climeworks.
Climeworks, I've heard of them. They do direct air capture, right? Big fans sucking couriers out of the air.
That's them. They use renewable geothermal energy and waste heat for their process, capture the TOEuro, concentrate it, and then partner with another company called CarbFix.
And CarbFix does what?
They inject the concentrated CAROs deep underground into basaltic rock formations, where it mineralizes and turns into solid rock. It's permanent geological storage. The data shows Climeworks removed 322 tons supported by this funding stream.
Wow, okay, that's serious science. What's the other example?
Charm Industrial. Totally different approach, equally innovative. They take biomass, like leftover agricultural waste, stuff that would otherwise decompose and release carbon.
Right.
They convert it into a stable, carbon-rich bio-oil using pyrolysis, and then they inject that bio-oil deep underground into geologic formations for permanent storage.
Injecting bio-oil. That's fascinating.
It is, and the sources note that Stripe Climate was actually Charm's first customer, funding the removal of 416 tons. So 3M, through Stripe, is supporting truly pioneering work here, not just established methods.
So pulling it all together then, if we synthesize this, what does Mohammed Majid's operation look like?
Well, you have this incredibly dynamic engine, right? It combines sophisticated, high-risk, potentially high-return financial trading across a global infrastructure.
The SECP registration, the Malaysian connection, the 5-currency banking network, the huge trading volumes, the 50x leverage.
Exactly, all that. And then it seamlessly integrates that with this forward-looking, significant financial commitment to cutting-edge, permanent carbon removal technology.
It's like the profits from the fast-paced digital finance world. Crypto, FX, commodities are being directly channeled into the slow, hard science of fixing a long-term environmental problem.
That's a great way to put it. It links the immediacy and volatility of markets directly to the permanence required by climate solutions. It's a really unusual and, frankly, quite potent combination.
Which definitely leaves us with something to think about. For you, the listener, we see this model here, using profits from volatile, high-leverage markets to fund crucial but expensive climate tech. Could this be a new paradigm?
Could firms that master these high-risk financial arenas become unexpected, maybe even essential, funders for accelerating climate solutions and bringing down that cost curve?
And are there other high-growth, maybe equally volatile sectors out there that could adopt a similar model? Where else could we find the capital needed to scale these vital technologies faster? Something to definitely ponder.